Started. Ah, all right. Well, thank you everyone for attending this month's market update webinar for the month of March. Let's begin with a few disclosures. Silverstone Financial LLC is a registered investment advisor. Information presented is for educational purposes only. It does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Please be sure to first consult with a qualified financial advisor and/or tax professional before implementing anything within this presentation. And of course, past performance is not a guarantee of future results. You can learn more about our disclosures on our website. And throughout the webinar, please feel free to submit any questions you have using the Q&A button at the bottom. Quick bio about myself. My name is Jeremy Eppley. I'm a certified financial planner, certified private wealth advisor, accredited investment fiduciary, accredited portfolio management advisor, chartered retirement planning counselor, and I have my master's degree in personal financial planning. You can learn more about me on my LinkedIn. And Silverstone Financial, the firm, is a fee-only fiduciary registered investment advisory firm. We provide comprehensive wealth management services, including financial planning, investment management, tax prep, estate planning, those sorts of things. You can learn more about us on our website. All right, let's get into some of the news. The biggest news for those that are on our mailing list and that see the changes to the website or see our blog posts will know that on March 1st, Gordon Ochterman of Your Best Path Financial Planning merged with Silverstone. So now we've gone from just a solo practice, just myself, to a multi-member boutique firm, and we're hoping to continue to grow. This has, of course, been possible thanks to our clients that have faith in both myself and Gordon's clients. So we're super excited for this merger. We're super excited for what the future will bring with this, and hopefully we'll have more to tell perhaps next month. Gordon might end up joining me for that webinar. So with that out of the way, look out for more news about that next month. But let's get into some of the markets. All right, so in February, we had our first down month in a while. The stock market fell, mostly being led by, it looks like, both small caps and mega caps. It looked like while I was watching the markets, some of the what we call mid cap of the market performed slightly better than either the top or the bottom. You see small caps fell 5%, and the S&P 500's top 50 largest stocks like Google and Amazon and Tesla, these were the ones that were dragging, fell 2%. But when you combine, you look at the what we call mid caps at the bottom of the S&P 500, only fell 1%. Now, of course, the market's falling is never fun for lots of people, but it is it's a reality. There's lots of reasons for why it happened, and we will get more into it at the end of the presentation. Other than the stock market, we saw bonds rally a little bit, up 2% for the month. That usually has to do is they're inversely correlated with the stock market. So people fled from the stock market due to some risks and repositioned into bonds. We also saw international companies, ex-US stock market, go up by about 1%. The ex-US international companies have underperformed historically, but with some added risks that we see in the US, it's kind of natural that some people are diversifying a little bit internationally. We'll see if those trends continue. I definitely have some things to say about all that later on, but those are the current trends. The biggest surprise, not necessarily a surprise, but the biggest number on here is Bitcoin being down 17%. It's usually it was considered part of the Trump trade. Now that Trump has taken office, there were a number of investments that some investors, some traders thought were a good move in terms of piling into crypto, since Trump seems more crypto pro, piling into some finance companies and other companies that are highly regulated, since the expectation is regulations would fall, oil companies, Tesla because of the affiliation with Elon. But it seems that some of those trends have reversed. Some of, not all, but some of those companies or investments, part of that Trump trade is like, oh, Trump is now president. These are going to be what perform the best, have unraveled. Not saying that's what's going to continue to happen. It's hard to predict, but when there is uncertainty and there is a lot of moving parts with the White House announcing various plans, you can see how it adds some panic, and some of those trades unwound and went back into, say, some more traditional safe companies. Like up here, we usually see consumer defensive companies like Procter and Gamble and Coca-Cola. Those companies usually rally when we see volatility, or high flyers like Tesla or Amazon, when they fall. The next chart that I want to show was the normal S&P 500 daily chart. For those of you that haven't seen this type of chart before, it's called a candle chart. If the candle, the little mark here, is green, that means for that day the stock market closed higher than it opened. And if it's red, then it's the opposite. It fell for that day. So each of these little marks, each of these candles, is a different day. And this shows 2024 all the way until today. And what I wanted to show was what's happened since the presidential election. I've had a number of calls with a number of clients in the past 2 weeks panicking about the stock market, which is natural. You can see there are quite a few of these red candles right here. It's a somewhat of a dramatic fall, but if you zoom out a little bit, you look back to where we came from, we're back to exactly almost when President Trump got elected at the beginning of November. There was a big spike, and then it sold off a little bit, and then there was more enthusiasm with what his presidency could do for the stock market, and then lots of volatility up and down. And then this seems to have come with the tariffs. The threats on the campaign trail, I guess, weren't being taken seriously when he started to actually impose them. So we'll have more to say about that. But the main reason I want to show this is we're back to where we started 4 months ago, and we're still up 20% from the beginning of 2024. So those of you that have contacted me out of fear, due to volatility, that's totally natural. It's uncomfortable. Seeing your account balances go down isn't great. But with that said, the world hasn't ended. You're still better off than you were in 2024 if you had started investing previously. And all this could mean that we still have further to fall, and I can't speak to what the market will do in the future. It's unknowable. But for those, especially my clients, all my clients have investment plans that are tied to risk tolerances and tied to time horizons. So if you don't need the money for 10 years, the question shouldn't be what's going to happen in the next 6 months. The question you should be asking yourself is, do I think the stock market is going to be up in 10 years? And historically speaking, it's like 99, 98, 97 times out of 100 that 10 years from any point in time, the stock market is up. And that's not every time, but usually it's a good bet to say that, okay, if my time horizon is 10 years, I'm not going to worry about what's happening right now. This next chart that I like to show every month, I think is a great chart. It shows the seasonality and cyclicality of the stock market. A lot of people don't realize that the stock market month to month has trends. Now, those months can be bucked. It doesn't necessarily have to follow what has happened previously. And these are averages, but we see, historically speaking, April, December, November being the best months. If you were to invest, say, in October 1st, the average return based on those specific months would be pretty green for 4 months. However, there's no guarantees. Last year, we saw, I think it was June, that had a very up month, and like October had a very down month. So again, these are averages, but I like to show the outside here shows the historical expected return based on the seasonality and cyclicality of the stock market. And the inside return, the inside circle is the actual return. So February, on average, is a coin toss. And this year, it seems like we got the coin toss on tails, and it went down by about 1%. Now we're still up year to date, 1.4%. We're flat for the past 4 months since November when the election took place. We're still up 20% since, if you go all the way back, since the January 2024. So I wanted to bring this, have that long conversation about there are things that we can't control, and the stock market is scary, and it's natural to be uncomfortable with the volatility in the market. But as long as you have a good financial plan and you're taking the appropriate amount of risk for your current situation, you should be fine for the long term. All right, so let's get into what is usually the most fun part for me, where I start talking about some of the news events that happened the past month. And as a reminder, since I think I had some questions last month, these aren't the largest news events. These are the most impactful finance news from my perspective. So there could be something that's important that I didn't find that interesting, or there could be something that isn't really related to finance. There are plenty of geopolitical, or plenty of simply political or fashion or celebrity, what are the hot celebrity gossip. And that isn't something we cover each month. What we cover is the biggest finance news. And so with that out of the way, I wanted to talk about what I found really exciting. The first one was VOO overtakes SPY as largest ETF. Now, I just said 3 acronyms, and it's okay if you didn't know any of those. So VOO is Vanguard's S&P 500 exchange traded fund. So for those that don't know, there are 2 main fund types. There are lots of others, but there are 2 main fund types that you might have heard of. One's a mutual fund, and one is an exchange traded fund. And now there are lots of similarities and a few differences between the 2 of them, but the gist is a mutual fund is the older version that was made way back in the early 1900s and became popular in the late 1900s. Essentially, you transact directly with a mutual fund company, and you give them your money. They give you a certain number of shares of their fund, and they invest the money for you. Now, exchange traded funds came around, I think it was early 2000s, maybe a little bit before that, where instead of transacting with the mutual fund company, you transacted with other investors on an exchange. So this fund was created, put on an exchange, and then you went and bought it off of the New York Stock Exchange or the NASDAQ instead of directly from the mutual fund company. Now, that history lesson probably doesn't affect you in your day-to-day life, but VOO it just overtook one of the oldest exchange traded funds, SPY. So it's a lot of people in finance just called SPY, and it's State Street's S&P 500 ETF. So they're essentially identical funds, and it took 20 years for Vanguard to finally overtake one of the original, or at least still standing original exchange traded funds. For us finance nerds that watch these different funds is pretty interesting. And the rationale behind why different funds perform better than others is really interesting. VOO, which is the Vanguard Fund, is at $632 billion in assets. Just that one fund is massive. Just in the past 2 months of 2025, it has brought in $23 billion in new assets. Coming from a professional finance manager who owns and runs a finance company, like, we're nowhere near 23 billion in assets under management, and they brought in 23 billion in the past 2 months. That's how massive these companies are. So having brought in 23 billion these past 2 months, on February 18th, it surpassed SPY. But for those that might be wondering, why is VOO becoming more popular than SPY? It's because VOO is about 3 times cheaper than SPY. However, you might then ask yourself, why are people still using SPY if there is another alternative that is identical in many sense to SPY? Well, it comes down to, first off, first mover advantage. It's 20 years old, and it comes down to liquidity. So a lot of professional institutional investors value liquidity really highly for trading in and out very quickly of different positions and investments. And SPY, since it's so old and so big, has slightly better liquidity, which is one of the reasons why it's so ubiquitous. Also, because for those that have bought it 20 years ago, if they sell it now, they have a lot of taxes to pay, so they stick with it. I feel like even though I can't see your faces, it's just a webinar. I feel like I probably lost some of you there where I started talking about some nerd finance things. We'll move on to some more normal news article events. The first normal article event I guess we could talk about is the Panama Canal. BlackRock struck a deal with a Chinese company who currently owns and manages the operations of the Panama Canal. And they paid $23 billion, this consortium of BlackRock and a few other investment managers, to essentially bring the Panama Canal ports, both sides of it, back under American control. Now, there's conspiracy theories and speculation and such, but President Trump has long alleged that Chinese interference with the Panama Canal could cause national security issues, especially since the U.S. sends warships through the Panama Canal sometimes instead of having to go all the way around the South America. So he's long, especially on the campaign trail, had mentioned wanting to get the Panama Canal back under the control of the U.S. He even threatened not so pretty thinly veiled threats of just sending military action to take down the Panama Canal and bring it back to U.S. control. Anyway, with that said, if I can put on my conspiracy hat a little bit, I would guess that BlackRock, Larry Fink is the CEO. I think more so than it being a good investment, I think by doing this and appeasing the Trump administration and showing, okay, well, we've helped you accomplish something for that one of your campaign promises to bring the Panama Canal back under control of the Panama Canal back under control of the United States. It probably wins him a little bit of favor in the administration. Now, is that how investment managers should be managing? Is that how the political system should work to advantage various companies based off of political decisions and such? That's not really for me to say, but it's interesting to see. And it is also going to be interesting to see if there's any impacts to BlackRock and some of these other either good or bad based on this deal. One of the news articles that I found both interesting but also very minor but I still need to bring it up, was when Trump announced 5 cryptocurrencies. It was Bitcoin, Ether, XRP, Solana, and Cardano. If any of any of the listeners here are crypto people, he named those 5 to potentially be part of a U.S. stockpile of cryptocurrencies. He announced that on Sunday, and shortly thereafter, seconds thereafter, those crypto currencies spiked up in value. And since then, just a few days later, they've fallen back to where they were before. It's most likely due to, Trump announces a lot of things, and not everything comes to fruition. So if the U.S. doesn't start actually buying these cryptocurrencies, there isn't a material move for the market to justify, spiking up all these cryptos. But there's also some more conspiracy theories, if you want to put on more hats here, that it's possible this announcement could have been to benefit friends of Trump or other influencers. I remember back in the peak of crypto fever in 2020, 2021, 2019, around that time, I was reached out to often as a young male on Instagram. I would get message DMs talking about, hey, we're pumping and dumping this crypto, and they were just targeting me because of my demographic. Young men was the most common demographic for this, and they were very clear. Like, they literally used the words pump and dump, and they're like, if you buy in with us here, then we'll tell you when to sell. And these are all scams and also very illegal, and I never participated, especially as a financial professional. I reported all those to Facebook and such. But there's conspiracy theories that aren't fully out there. I could believe them somewhat, that these announcements made by an influential figure of the government to influence stock prices, in this case crypto prices, that aren't regulated because they control the regulations. And the SEC has been somewhat gutted in terms of its crypto regulatory power. It begs the question of if there's any kind of, like, who is the beneficiary of these announcements. I'll leave it at that. It's interesting I think it's interesting to see. All right, two more events that I wanted to touch on. The first one, actually, no, I'll end with Tesla. So let's talk about the stock market. So the stock market fell, and I already discussed previously about not panicking too much about the stock market having fallen. But there are a lot of people that I spoke with. One of the reasons that they were uncomfortable with what the market was happening is they weren't sure why the market was falling. And the market goes up and goes down for literally millions or billions of reasons. There are public markets, tons and tons of various influences that come into it. Some people are selling, some people are buying, some people have different philosophies or investment theses, or just have different needs. Sometimes someone just needs to sell their money to buy a new house, and there has nothing to do with what the market's doing. But with that said, with lots of various potential impacts or influences of why the market's falling, the most likely, what I've heard the most cited, is the tariffs. So tariffs having been threatened, and tariffs having been actually implemented as of today, on Tuesday, yesterday. Tariffs actually went into effect against China, Canada, and Mexico, and immediately retaliatory tariffs went in against the U.S. And in general, having a trade war isn't a good thing. I can try to pull some silver linings. One I've mentioned before, I think last month, was that tariffs for at least half the population are a popular form of taxation. And it's a taxation on the consumer, ultimately, but the government needs to raise money. And if the populace is willing to pay these taxes without really fully understanding and knowing it, from the government's point of view, that's a great thing. If you can convince the populace that paying more to the government is a good thing to then be able to pay down its debts, um, could be a good thing. However, the retaliatory tariffs kind of make it worse. If you can't sell your goods, if you can't export your goods, your economy will suffer from that. I think most of these tariffs from Trump are to get concessions out of various countries, get concessions out of Canada, or get concessions out of Mexico, or China, whatever that he's using. Essentially, the carrot or the stick. I think he very much likes the stick, and the stick being tariffs. Will those gambles pay off? In his first presidency against China, they paid off somewhat, and Biden did keep the tariffs in effect. Essentially, there was no reason for him to take them off. The market had gotten used to them, and they were revenue. So why would you take off the tariffs? So it's really the person, the president that enacts the tariffs is the one that gets blamed for them usually. But I would be surprised if they come off in the next president, even if they are Democratic. So we'll see how this all plays out. There were a lot of warnings that he was going to enact them. He actually did enact them. How long they will last, we'll see. They could last forever. They could get taken off the countries if he gets concessions out of them. We could get more retaliatory tariffs. I think the next biggest question is Europe, especially with how he's chosen to interact with Ukraine, and Europe being very, very opposed to how the US's new stance against Ukraine is. I've seen news articles about the European Union considering tariffs on the US. And again, it's a spiral. All these problems can cause deteriorating effects, and in finance called contagion effects, where the classic example of a contagion effect is if there's one run on one bank, then there could be run on two banks, and then run on four banks, and then since the banks are failing, then the mortgages are failing, and then the economy is failing, and then the European economy is failing. So I don't want to make it sound too bad. There are risks, however. Investing involves risk, the economy involves risk, life involves risks. So will these risks that the Trump administration is taking pay off? It's possible. They did all right in 2017, 2018 when he enacted tariffs against China. However, is it a good move? I don't know. We'll have to see. I will definitely keep all of you updated on that. All right. Last one that I want to talk about was Tesla. So Tesla's fallen, the company Tesla, their stock has fallen 31% in the past 2 months. They fell out of the $1 trillion club. They were worth, I think, 1.2, 1.3 billion or something, maybe more. And now, as of today, I just checked, it was 898. So essentially $900 billion is what Tesla's worth. And even at $900 billion, in my personal opinion, there are reasons to justify it being overvalued, but I'm not giving specific opinions on specific stock valuations, at least not in this context of a webinar. But from I guess we'll say a geopolitical analysis point of view, what's happened with Tesla is really, really interesting. So for those that don't know, Elon Musk, which is this man right here, is the CEO of Tesla. He's also the CEO of SpaceX and a few other companies, but currently he seems to be the CEO of the United States. He gave a lot of money to the Trump campaign and other Republican lawmakers during their elections, and he won a lot of favor and a lot of power in the government, and now heads DOGE, the Department of Government Efficiency, which is also, for those that never caught it, is also a joke to the Doge crypto coin. Anyway, so he's aligned himself with Republican conservative lawmakers, and there are a number of reasons that he has distanced himself from the Democratic Party. If you go back 10 years ago, 8 years ago, he was heavily Democratic, and now he's heavily conservative. So ignoring the reasons, that's a whole other webinar that would go into why he's shifted. But now that he has shifted, it's very interesting to see from an outside perspective of it doesn't make much logical sense for a shareholder of Tesla to be supporting Elon, at least in my opinion. Tesla, the whole point behind it, I think their original slogan or mission was to accelerate the adoption of green energy or electric vehicles or something like that. That was their motto. And the point is, it's supposed to be a greener company. Environmental change, climate change, environmental sustainability. That was the ideas behind it. And for a long time, those that it spoke most highly to, those that resonated with that philosophy and the brand and the idea of actually buying these electric cars, were liberal people, both in the US and in Europe, where Tesla was a green alternative, where for more conservative audiences, that was not important. Some even went as far as like would only ever buy an internal combustion engine. That was their thing. You know, why buy a car if you can't see the black smoke come out of it? Now that he has shifted his political allegiance, and not only shifted it, but like in a very, very, very public way, where he's making enemies and he is making it like it's not like subtle dark money donations that influence elections. It is, very, very public donations where he is in the Oval Office with Trump constantly. I have seen from anecdotal experiences that has turned off more liberal both investors and car owners, and has hurt the Tesla stock price. One of the most interesting news articles I read was, I don't know if expose is the right word, but a survey where I think it was Denmark, I'm not sure which European country, but they surveyed Tesla owners, and the majority of them responded that they planned, now that Elon has become who he is and is very conservative, the majority of Tesla owners in the country planned on selling their Teslas and they stated the reasons, because they felt uncomfortable driving them due to judgment of who they felt were important to them. Other, let's say, liberal people, who was their friend groups and such. And they felt that driving a Tesla made them feel uncomfortable, so they planned on selling it. And after I saw that article, I did some, looking into all that, and saw that, used car prices for Teslas have fallen because the supply has gone up. More people have sold them. I personally have at least one friend, I think a second friend that was talking to me about it, where they have already gone and sold their Tesla. And the specific reason they did so was because of Elon Musk, the CEO, and their political leanings. So if people are selling their companies or selling their cars, there's going to be a negative impact on revenue and a negative impact on the stock price. Beyond just like the consumer side of it, I have, from personal anecdotal experience, had in the past 4 weeks, 3 or 4 clients specifically state to me that they wanted to exclude Tesla from their portfolio holdings, which is perfectly fine. Any client of mine can exclude any portfolio holdings they want, especially since we do an indexed approach. I don't have particularly strong opinions on any company. We buy the market, and if there's a reason that you want to exclude a specific company, we can do so. That's one of the benefits of direct indexing. Instead of buying a fund, you're stuck with everything that's in that fund. When you directly index, you buy every company in that fund. If there's one company you don't like, we can exclude it for you. One of the benefits of working with Silverstone. So I've seen both sides where, Europe and European polls of people selling their Teslas because they're uncomfortable. Personal friends who have sold their Teslas because they're uncomfortable. Multiple clients in a short period of time, all specifically excluding, not any other company, just Tesla to be excluded. It's interesting, and I am not surprised at all. I think from specifically Tesla shareholders' point of view, Elon has made a big mistake here. Now, I don't know if Elon cares too much about what the stock market says about Tesla, or Tesla shareholders. He might have more important priorities in his life than Tesla shareholders. But I would not be surprised if Tesla continues to suffer until Elon is replaced as CEO. Now, I don't know if they'll ever be able to do that. Just last year, we covered, I think, 3 different times how Tesla's CEO pay package was the largest in history, and they paid Elon like $60 billion or something like that in stock options. And it got fought through court and got reversed. And then it went to a shareholder vote, and the shareholders overwhelmingly voted to give him the money. So he's popular among shareholders, yet he's also, in my opinion, one of the reasons that the company might struggle in the coming years. So I'm really interested to see how all that plays out, and if his popularity among shareholders changes. We'll see. All right, I think that's everything I wanted to cover. I know I talked for quite a while about some especially the VOO. I could see some people falling asleep through the screen, I'm sure. But what matters is making sure that all my clients have a chance to understand what's happening in the markets, and have a chance to ask any questions that they have throughout the presentation. I saw one question come in, 15 minutes ago, but I weaved the answer into my discussion here on the notable events. So I'll wait for just a little bit if there's anyone else that has any questions that want to be answered. But otherwise, I really appreciate all of you spending time with me tonight. Next month, you'll hear more from my new partner, Gordon, and hopefully he'll be able to join us on this webinar. And yeah, I hope all of you have a nice month, and I'll see you back in April. All right. Have a nice night, everyone.